So in China, we still face a situation of high inflation at the factory gate, but on the other hand, soft consumer price inflation. So this high inflation at the factory gate is not passed through to consumer. In my view, the Chinese central bank will continue to exhibit an easing bias in the second half of this year, because it will focus on cushioning the moderation in Chinese growth. Chinese growth data on aggregate have softened for the fourth consecutive month in a row, and given the still soft inflation outlook on the back of weaker domestic consumption in China, it is likely that another loosening step will come. Looking forward, this means that the PBOC, the divergence between the PBOC and the US Federal Reserve will become more pronounced later this year.
I wanted to ask you about your equity strategy then. If you see that glass perhaps being a little more half empty than half full right now, does that mean that perhaps the correction risk is building? We haven't seen a 5% correction so far this year. Some saying it's now well overdue.
Yeah, that's an interesting aspect. So, as a matter of fact, the markets have been fast forwarding the global economic recovery. So even if we do see a still conducive macroeconomic backdrop with growth rates being solid, above potential, there are a couple of factors that point towards the risk of corrections as we head into the second half of this year. First of all, the peak momentum that I've talked about, the peak in growth momentum. Then also we will see further steps towards the normalization of monetary policy, but also fiscal policy from high levels. And the question really is also whether investors' view of inflation, which is currently the view that it's simply transitory, will refocus on the medium-term risks towards inflation. So this is an environment overall within equities where we continue to hold a neutral plus in a multi-asset context. So we would still be slightly constructive on equities overall, but it's an environment where you have to be more selective going forward.
Just quickly on the ECB meeting, is it going to be as hawkish as some expect?
Only slightly hawkish in my view. The big decision on the pandemic bond buying is coming up later this year, probably in December. But investors will clearly focus on any kind of hints how the ECB will set out its post-pandemic stimulus. And there might be a first step or first hint that the PEP program will not be extended beyond March 2022, namely that the Council will decide today to not increase or buy significantly higher amount of purchases than earlier this year.